Yo, 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 can you guys hear me? Can you guys type yes in the chat? Hit the like button, ladies and gentlemen. We'll start it, we'll fire it up real soon. It's been like a month since we did a live stream. Y'all been doing alright. Sure missed everybody. Someone let me know if we hit 50. Yo, yo, yo. What's going on, ladies and gentlemen? Welcome to the live stream. Today we're gonna be talking about Bitcoin. Hope everyone is doing good. I'm gonna do one more quick mic test. Can you guys hear me? Testing 1, 2, 3. 1, 2, 3, testing 1, 2, 3. Can you guys type yes in the chat if you can hear me? I'm gonna try to keep this live stream a little bit short. I effed up my shoulder. I was doing some military presses and I think I ripped like a ligament or something on my shoulder. It's not the rotator cuff, but yeah, I'm on some pain pills right now, man. It's every time I click the mouse, I feel this horrible sharp pain. But you know me. I do these live streams and videos and X updates every single day, and I'll be doing it until my deathbed. So let's get into the live stream. We're gonna do a top-down analysis, see where we're currently standing within the markets. Oh man, you know, I would do the Texan accent, but not feeling it today, my man. Not feeling it. All right, let's get started. Let's get started in here, ladies and gentlemen. Let's do it. Roundabout on Bitcoin. So, thank you for joining, ladies and gentlemen. If just very quickly, please make sure to hit that like button, subscribe to the channel if you haven't already. We got a lot of things to talk about here. We've really toned down on the live streams just because I'm a one-man operation here. I wish I can clone myself and someone can just post everything for me, but I can't. So with that being said, we're going to do a top-down analysis here. A lot of my analysis are being shared on the daily in my Discord. So if you're interested in joining the Discord, yeah, it's not a sponsorship because it's my channel, right? Right? But for those that are in the Discord, hello, welcome back. And for those that are new here, welcome. The links are in the description below if you are interested. We do offer a Patreon as well if you are interested in joining that. We do 2 video updates a week in there as well, just strictly for Bitcoin. But we also do a Discord membership where we have a lot of different analysis, all for altcoins and so forth. A lot of my market sentiment is all going to be updated in there as well. We've been operating since 2018. So sit back, relax, enjoy some of that sweet tea my wife made. Let's get it. So what we're going to do here is just kind of talk about Bitcoin in its possible 5th wave here. We're trying to discuss if this is a series of 1-2s being in the making here or possibly a possible triangle here in the making. But both are pretty bad. Both are pretty bad, but it's just picking which one you want, basically, at this point, right? I mean, there's no point in arguing about it. It's just basically choosing if you want a higher target, we're going to go with the overall impulse scenario. And then if you have a more measured target for a breakout of a triangle, we're going to be ranging here for a little bit longer. That would be the triangle idea. Now, both ideas are absolutely fine. I think people are exaggerating on which scenario is fitted better. But to me, I think, me working alone, a lot of people are DMing me like, oh, the triangle idea is better. To me, honestly, I don't really care. Both ideas are absolutely sound when it comes to the validity of it. But there are ways we can narrow down these scenarios as best as we can. And my preference is still the 1-2-1-2 idea where we've created a 1-2 here, 1-2 here. Now, you're going to have some, subjectivity arise when it comes to the degree timings of, the parent degrees and the lower degrees of these 1-2s. However, it's really not much of an issue here. The timing issue is just more of a secondary guideline and approach on how we should be applying these when you're talking about the Elliott wave theory. So with that being said, both definitely have their merits, but both also have their cons when it comes to the approach of how we're going to be achieving a higher degree of wave 5 to the upside. So we are for sure, though, however, running out of time in the sense that this range here is being extended quite a bit, right? Meaning that if you have your termination point here as a wave 4, you definitely have a nice looking 1, 2, 3, 4, but then you do have the issue here, the timing issue, the timing chain issue of these series of 1-2s. You really need to get out of here as soon as you can. But bear with me, because we also had the same issue here when we were creating a series of 1-2s here, right? A lot of people were grossly exaggerating the problem with having, these 1-2s here. But for this one here, the issue was we were creating a lot of higher highs. However, the extension of these wave 1s were quite long in time, right? Here, we're having sort of a different issue because we're working with corrective structures now that's having an issue with their timing issues, right? Now, I think the best way to just conclude this in terms of degree timings is, for me specifically, when you're working in a 5-wave impulse, the real timing issue comes in when you're working with a larger degree 3-4 against a larger degree wave 1-2, okay? For me, when it comes to these 1-2s, it really doesn't matter in my opinion. I think the best way I can kind of narrow down this idea is if you have a 1-2 here, and it's starting to look quite long in time here, to me, that's still just the beginning structure, meaning that it can definitely be turning into a different structure, more likely as possibly a wave A or B, right? Because usually when you have such a long time, these A-B waves usually are more applicable because corrective waves just work with that, right? Usually your B wave connector waves will have kind of alleviate that issue with the 1-2-1-2 idea. But to me, it's not an issue here just due to the fact that we didn't create a higher high, right? And I think that's why over here, there was not so much of an issue because we created a higher high. Now, the problem arises when you have a 1-2, okay, a larger degree wave 1-2, and then you have a higher degree one that's broken or broke the previous high, and then you have a large correction here. Then you have an issue like this, okay? So that is when I personally like to think that something else is being in the works. For now, it's really just boiled down to, are we in a wave 1-2 or are we in a different corrective structure such as this, where we're working in A, B, C to the upside. And we're using the previous range as corrective overlaps in the sense of this being an ABC, this being an ABC to the upside. So yeah, I can sit here all day and debate about it, but there's just no point in doing it, right? So just be that chill guy, man. Just be that chill guy, that little dog that's, one hand in the pocket. Just be the chill guy, relax. We're still in a range here, and that's the most important thing. It's just how it's going to be resolved. Now, the reason why I still think the triangle idea, however, is an alternative idea is just due to the fact that where, like I said, the degree timing issue comes into play, actually does come into play. Now, this triangle is quite large against this wave 1-2 here. So why are we making the argument of having this being a problem as a series of 1-2s? You see, there's that hypocritical approach. So a lot of people are either one, not organized, or they're focusing or grossly exaggerating the series of 1-2s. Now, like I said, the best way to organize it to me is having that issue when you're breaking that previous high here, and then you have a problem of this 1-2, because at that point your expectation is to the upside as you broke this previous high. And then when you have a large exaggerated in time of a 1-2 of a smaller degree, then you may be part of a different structure, more possibly a corrective structure, where this may be turning into an ABC, that could be the WXY, and that is what also helps alleviate that problem as well. So it's just more of a secondary guideline, ladies and gentlemen. I think, again, I'm still accepting this idea of a triangle. I think it's just really picking your poison, okay? So with that being said, the most important thing is just our overall general expectation that we're looking for higher upside. The reason why I like this idea is because it just helps resolve this whole range entirely. So there is a little bit of a higher expectation that we're going to be resolving this as an impulse. So that may be a little bit ambitious, but again, if we do get that, then at least we'll know that this range has been entirely resolved, where we're breaking this entire range. We get out of here and we break that timing issue, not only in the sense of the 1-2s, but also the higher degree wave 4 being confirmed, and we're still more likely to work for a higher degree wave 5 to the upside. So that's how I'm currently seeing it. There's really just no other way to see it at this point. I think we have two levels, or two critical levels, that is, that we have to be monitoring. And with each new higher low being created, there is we got to up the ante in terms of our soft invalidation levels as well, because right now this here just seems to be that corrective move that has completed. I don't want to be saying that this is some kind of larger ABC being created here, because again, that 100% level, if we're going to deem this as a wave A to the B to the C here, that's already at pretty much 99% of how this 1-2 has been created, right? And at that point, you're not going to have a triangle, right? Because we have our A, B, C, and our C termination point is here. And if we're expecting higher levels no matter what for a D wave, you really want to be getting the F out of here right now. So that's how we're organizing this whole situation, right? Now, oh, shoot, guys, sorry. Let me remove that text. This whole time, this text was there. Oh, man, I'm sorry, guys. Is that better? I'm so sorry. I am so sorry. Earth to Eric, where are you? All right, let's get back into the analysis. But I'm sure you guys got the overall point, right? But yeah, that's the overall way of getting this range resolved, right? So very simply put, if we're gonna zoom in now and talk about how this is going to be resolved, we have both of the scenarios here as either the 1-2 or the triangle idea, and I've done my best to kind of organize it as such here, right? And right now, the only thing that we're focusing on is either this being the wave 1 or a wave A. That's part of the triangle, right? If it's part of the triangle, we're going to get a rejection most likely around the 100% level, where we have an assumed A, B, and then we're using the Fibonacci extension just based on minimum expectation of equality between waves A and C, is that we have an A here, B here, and then a C that should be terminating around the 100% level or so, right? So that should be our assumed point of BD trend line being created, right? But again, doesn't really matter. We're just waiting for how this is going to be playing out, and then we will look for, even with the triangle scenario, a possible breakout scenario no matter what. So right now, the best market psychology approach to this is that range traders are getting brutally beaten up the most here, and breakout traders are just waiting for some kind of validation, either for this level here at the $91,000 levels, and then ultimately the $89,000 levels. To me personally, we'll get the first signals of breaking these levels here, and then definitely this critical level here at the $91,000 levels. That should be our ultimate confirmation that we are going to be looking for lower levels. Now, there is a bearish scenario that I was going to share on X, but I'd rather just share it on this live stream because there's just so much information to put out. But for now, This is currently my overall bias that we're looking for a breakout to the upside, either as a 1-2, 1-2, or as a B, C, and then eventually possible D wave here, E, and then we're out of here. Ideally, we would want to truncate even the wave E. So we have a lot of assumptions that we're making here, a lot of expectations that we're kind of making, but the overall trend direction that we're looking for until some kind of major invalidation level breaks is going to be our key point in terms of going forward. So that is the two scenarios. There's really no other way of seeing this other than a possible major bearish scenario. Now, you guys are interested in the bearish scenario, right? But we have that issue here as well. Now, let me explain why this scenario is not on my list in terms of going straight into a bear market. Now, it's not impossible. It's just very unlikely in terms of past behavior of how bear markets have functioned. Now, number one, the first biggest red flag for me is we've never seen distribution happen in a series of 1-2s. First of all, we have the problem of having horrible looking 1-2 ideas here. I mean, unless you're seeing some kind of expanded diagonal being here created, also that is a rarity in itself already. But right now with the current data given, usually you don't see these types of 1-2s being created and then have these follow-ups of 3-4s. Now, let me explain why. Because if we go back to not only the previous bear market of the 2022 bear market, is that usually these actionary waves are swift and sharp. The first round of psychological despair comes into play even during a distribution phase, like this V-shaped recovery that we had here, is that you'll usually see the initial move being very sharp and swift. You'll see that actionary wave or the 5-wave move going into a wave 1 or a wave A being very strong. That we don't have right now. That's the first thing. Like right now, you can see the typical behavior characteristic is not being applied here because we have just so many corrective overlaps. So what does that mean? That means that these corrective overlaps is most likely part of some kind of bullish continuation, especially that we don't have enough information other than this being a possible impulse completion, but we have far more evidence that there is one possible leg missing towards the upside as a 5th wave. So if we go back again, as you can see here in that bear market, even before we created a higher 5th wave, even after some kind of ending diagonal that happened, we still got a swift move, right? These initial moves is what we're looking for, and then any kind of distribution being created afterwards, that is going to be our usual typical confirmation of a possible bear market or at least some kind of larger corrective move. Now, if we go back to even the 2018 bear market, you can see the same idea here. We usually have a very strong, swift move to the downside and then a large distribution phase to happen. I think this was 100% bounce in itself, or 60% bounce, right? So that is what we're looking for. These huge initial drops is what we're looking for. That is our opportunity, ladies and gentlemen, for entering the bear market. We can sit here all day and talk about where the top is. That's not how you should be trading a bear market, ladies and gentlemen. You have to position yourselves on all of the corrective waves, either as a bull market or a bear market. Doesn't matter. All of these 1-2s and 3-4s are the absolute confirmation givers that give you not only a clear risk reward, but also clear invalidation levels, right? That's where the Elliott wave theory does such a great job. It gives you an if and that scenario, right? If this happens, then it's most likely going to be this. If this happens, then it's going to be invalidated. If this happens, then so forth, right? Everything in between is all just noise. So these are what you're looking for. You don't want to be looking for any of these, 1-2s, obscure 1-2s being created, and let alone we don't even have a clear looking 1-2 in the making right now. As you can see, it's really ugly. It's absolutely possible. Absolutely possible. It's just not characteristic of what we're looking for, right? With the current data given, this was pretty much the only given opportunity at that point, but we got a strong bounce. And even this as an ABC to the upside for a wave 2 of a smaller degree is very, very strange, where you have the minor degree now working extremely distributive, right? So what is the only ultimate confirmation? Well, the ultimate confirmation is this going to be breaking, right? So that being broken, it's most likely going to be coming into play, but it would have to be extremely swift. And not only swift, you have to assume that it's going to be extremely, extremely strong going forward for all of these series of 3/4s of the higher degrees, right? So that's how we should be looking at it, ladies and gentlemen. That's why we're not looking at the major correction scenario for now. So that's why we're sticking to what could be this series of 1-2s, where we're looking for either an ultimate breakout confirmation, we're looking for a very strong swift breakout to the upside, and we're treating this range as, or dividing it rather, as either this wave 4 being complete and we're now working in a series of 1-2s, or we're still working in the wave 4. Now, there is a possibility where I would assume, because we can change a lot of the internal counts here, right, that this is a wave 3 rather, right? And then we may be working in a 4 and then a 5 to the upside. But again, you still have that issue of, a timing issue, right? This is where that timing issue comes into play. Now you're looking for a prolonged possible, ABC or WXY correction type of pattern, right? This would be treated as an ABC. This could, possibly turning into some kind of triangle for a wave X. And then you'd be looking for another ABC to the downside, and that would be your wave Y. Then we can continue up. That in itself could be a possibility, but right now, there's just so many other overlapping scenarios. It's just which conviction that you're going to be, putting on. That's where, a lot of people don't understand. Conviction is very important in this market, right? You have to align yourself with the fundamentals of the market. Some people are just purely, technical analysis. I like to, align myself with more of the market psychology of the markets, right? How these wave 4s, how these wave 2s align with each other. So this is one possibility. I would say this ABC, we have a possible A, B, C, D, E of a triangle being created here. But again, it's so close to invalidation on the micro time frames that it may be deemed quite unlikely that this is going to be the wave 4, right? But again, there's a possibility. I think this could be resparked in terms of, are we really working for some kind of wave 4 that could break this level and we still find support around these levels over here? So this idea actually fits a little bit better than the actual bearish scenario. So if I had to prioritize it, I would actually not even prioritize or have this on the list just yet until we get a real swift wave 3 to the downside, broadening these extensions, these wave 3s, at least 2 degrees below the higher degree of the primary degree that we're looking at. So that's how I'm currently seeing it. I think if we're going to be looking at some kind of possible corrective scenario where this may be a wave 3, and then we're working a 4 and then a 5, this may have a little bit of a better approach, as this does have a far better swift move. So actually, this actually might have a higher probability than the actual triangle scenario, if you think about it, where we have the wave 3 here, and then the 4 gets, it heavily extended in time as a sideways structure. I'd rather actually just have this wave 4 terminate at a lower level as a possible, WXY if this triangle does, play out, or even a flat idea of some sort for wave X, and then we'll have another ABC to the downside. This actually fits a bit better, and it also helps, with expectation and also the idea and following another tertiary kind of guideline, which is the idea of alternation, which is we are going to have some kind of sharp correction against this wave 1-2, which was a sideways correction. Now, I know a lot of people are, saying that this triangle idea, there's a triangle here and the termination point is over here. Already, that idea is out of the picture, right? In my opinion, I think we have to treat ourselves that this is a sideways 1-2, right? So that's the only given way that we can see this as a current impulsive structure that we're going to be looking for. So this would be the only way. We'd be pretty much labeling, possibly just seeing this as Not the best looking, but it is really the only way. Seeing this as a diagonal going into wave 1, 2, 3, 4, and then this would be the fifth wave going into that wave 3. So this would be the primary degree. So you can see now the internal structure is not looking the best here, right? So how do we now organize all of this? As you can see, my train of thought, you guys are seeing how I'm able to organize a lot of these, right? Or we have to make some internal sacrifices of which, levels are going to be deemed as market inefficiencies, where we may have or where we can make some kind of adjustments to, maybe some timing issue, right? Which is this. This would be the best way. The best way to resolve it is just get out of this range as best as possible and as fast as possible. Or are we going to be working with, are we staying above these, important critical levels? Are we going to work as sideways here? Now this timing issue of a wave 4 being so long in time against this wave 1, 2, not only that, you have the problem of this being a running triangle. This doesn't, if it was a normal contracting triangle, that in itself is also very rare that can replace a wave 1, 2 that is sideways as a possible sharp correction. That helps also fulfill the idea of the guideline of alternation, but we don't even have that. We have this extreme price extreme for wave B, which is now deemed as a running triangle, and the running triangle itself is already quite low in probability when it comes to real-time play, right? The running triangle is usually validated in hindsight, and until the next wave that actually happens, that's when you actually validate the running triangle. And we don't even have the wave D and E just yet. Usually you want to wait for, a BD trend line, and that's where a lot of these other altcoins that actually do have a BD trend line, again, another hypocritical approach. If I'm able to see the BD trend line on a multi-year scale, a cumulative range that's been creating higher lows, why are we assuming a BD trend line that hasn't even been created here, let alone this being a running triangle? Why can't they validate or accept the fact that these altcoins that are going in a 6 to 7 year accumulation, like XRP, for example, if we look at XRP, if this was in a 7-year accumulation, we had a very clear BD trend line being created, why were people completely avoiding this idea? Do you see what I'm talking about here, ladies and gentlemen? It's a lot of people may be great at theory, but they're horrible at execution. And I think that's a very important topic here. You can be the best analyst, but you can be number one, very bad at organizing your scenarios. Number two, you're very bad at executing your own personal trades, and you don't preach or exercise your own personal, train of thought. And number three, risk management. That's where the organization comes in, and this is how we have to organize our scenarios as best as we can. So with that being said, really, the bearish scenario of having a 1, 2, 3, 4, having this as the possible scenario actually has a little bit more weight than the actual triangle scenario, in my opinion, ladies and gentlemen. So that's how I'm seeing it. I think this has a little bit more weight, and I would say that this is probably the more alternative approach than the impulse idea, where we have this as a 1, 2, 1, 2, instead of having this as sideways 1, 2, or sideways 3, 4 of a triangle. So hopefully that gives you a little bit of an eye-opener in terms of how you can be organizing your scenarios as best as you can. So that is the way we're going to be looking at Bitcoin. Now, can we do a further top-down analysis? Absolutely. I think that we can kind of now go back and, dissect since Bitcoin's inception and talk about how far this actually can go. And this is following very, very well. We are following on schedule quite nicely. If we go back to my analysis back from last year, usually I do these yearly analysis. We were looking for a fifth wave to the upside. All we have to do is just make some simple adjustments to the upside, right? And we were looking for some kind of 1, 2, 3, 4, 5, and we're now in the fifth wave. That's now starting to look like it's conclude. So we just make some simple adjustments. We're looking for a final fifth wave to the upside, and that is the overall narrative that we're sticking to. And especially so that we're also sticking to the narrative of these Bitcoin halvings, where we're working in a 4 to 5 year cycle each way that we're going. Now, the only real kind of anomaly that happened in this current bull market is that we went ahead of schedule. for this wave 3, that is. So that means, are we ahead of schedule for going into a bear market at the same time? That's something that's on the table as well that I'm also observing. So the market maturity theory that also might start coming into play here, where, you know, each phase of these cycles, with each halving that's passed, is going to be more geared towards market maturity. And I think that this ahead of schedule that we had over here, it caught a lot of people off guard, especially the sideways 1-2 that we had here. And then this continuation of a wave 3 to the upside was ahead of schedule, and that caught a lot of people off guard. And now we're just kind of working with that same idea that this fifth wave is now going to be concluding, just like we assumed back in May of last year. So with that being said, the best way that we can count this, now I know a lot of people are going to see this from a subjective approach, that this is not the best way to count it, where you may have a wave 1-2, 1-2. And I'm very aware of that as well, meaning that we have a series of 1-2s. However, if we're working with a series of fractal characteristic of each, you know, cycle that, you know, we're assuming fundamentally that each bear market and bull market is going to be playing out relatively the same, it means that the overall cycles are going to be the same, meaning that we have a series of 5 waves, an ABC or WXY correction of some sort, 5 waves, corrective, 5 waves, corrective, 5 waves, corrective. That's really the only approach of how we're applying this. And we're now looking for what could be a possible intermediate degree to the downside. And finally, if we're at the maximum, in my opinion, 4 degrees with the highest degree and then 3 degrees below of having a series of 1-2s, that's usually my maximum approach in terms of how many 1-2s that you should be applying. That could still have a relatively high probable, breakout trade, is that the next series of, 3, 4, 5s is just going to be a prolonged bull market. Now, this may be too ambitious, but it is what it is. It's really just with the current data given, right? So how do we alleviate this subjectivity as well? So you can see, even I, ladies and gentlemen, even I take into consideration of critical analysis from what could be very subjective. I take that very, very deeply to heart. So if we're looking at not only the halving issue, that could be having a series of 1-2s that is also very, very ambitious, we could alternatively see that we may be just working into a larger degree of wave 1. Now, this is also not the best approach in my opinion. It doesn't have the proper look in my opinion, but it is possibly the only way I would personally see, unless you're seeing some kind of extended 3, 4, 5 to the upside. But in my opinion, it's just best to say that this wave is going to be going into wave 1. Now, this idea is working going to be very brutal, that is, for a lot of people, because this is possibly, if we're fitting into the market maturity idea, the thesis that I'm currently building up for the past 7 or 8 years or so, is that this move here is now considered pretty much the retail and institutional phase. And now this here is where everyone is going to be selling off their Bitcoin. Even if it were to go down to these levels here, a lot of people are still, taking profits from the people over here that have been building up their positions. So with that being said, this COVID crash that we had over here is considered a wave 4 now. Now the wave 4 termination point is here, so we do have a lot of room for invalidation, and the validation point is going to be around $1 million per Bitcoin, right? So we have a lot of room, around 10x gain or so until we actually invalidate this scenario, but this is going to entice and really entertain the people who are very bearish, right? But it's going to take a lot of obstacles along the way, and it also takes into the account that we're not moving straight up, just like that 1-2, 1-2 scenario. So what that means is we have this here after this termination point of wave 4, that this is a corrective move going into the first subwave of a wave 1 of a possible diagonal. We have a WXYXZ for this wave 2, ABC going into a WX, and then we're looking for that same 5-wave move to the upside for a wave A. We get a significant pullback, and maybe this zone here is going to be acting as a B wave support, go back up, fake out a lot of people, go into that $190,000, $200,000 to $240,000 region. That'll be our top for a wave 3 of some sort. Come back down for another wave 4, most likely into the territory of wave 1 by a hair, going back to the 60K, and then another massive move up to $300,000, $400,000 region, possibly even overshooting into the $500,000, $6,000 regions, and then that's where it'll be destructive. You know, 7 to 10 year bull bear market that could be similarly building up, just like what we've been building up for the past decade or so, for the past 15 years or so. So if that's the case, what is a 10-year bear market rally going to be doing against a 20-year bull market, right? So it is what it is. I mean, Bitcoin is in a bubble if you really think about it. So that could be leading us up to even, $3,000, $6,000 regions. So that's one way of looking at it, ladies and gentlemen. I think this would be the possible best way of doing it. I think this is really the ultimate way of looking at it. So remember, ladies and gentlemen, the termination point here is here. As long as wave 3 is the second longest wave, it is absolutely fine. So this right here, as you can see, we have only this being compared to this possible wave 3 in terms of the sizing here. So this would be another approach. I think this is a little bit too creative in my opinion, but it is what it is. I think this is really the only way. There's just no way I would fit in as a possible 1, 2, 3 for it, where you have this being a wave 1. Now you also have the problem of wave 3 being too short as well. So this would be really the only applicable approach when you're trying as best as you can in terms of fitting in the market psychology and everything else. So remember, organization is the key aspect here, okay? You can be the best analyst, you can have the best count, but if you don't have the proper organization skills, boom, you're going to be already behind a lot of people in terms of opportunities. So this here is currently the best way I would see it. Series of 1-2s just fits into the ideas of a fractal cyclical nature of how Bitcoin has been behaving in the past 15 years or so. We're going to be expecting a bear market regardless. And the diagonal idea, same idea. Around that level here, we're still looking for this boxed area to be a major pullback no matter what. So we'll have a lot of ways of not only confirming it, but we'll have a lot of time as well to confirm on how these pullbacks are going to be playing out. So those two ideas are the best ways. Now we do have a flat idea here, but I would say that's now pushing it. This doesn't look corrective. This is objectively clear as some kind of 1, 2, 3, 4, 5, and the only way I would see this, like I said, is moving up higher if we're seeing this as a corrective move for that diagonal scenario where we have this as a WX and we need an ABC to the upside. So that'll bring us further than the anticipated B wave expanded pocket zone, which is around the 123.6% to the 138.2%, and we're already surpassing that level as we speak. So that would be the only way I would see it, unless you're seeing this as an ABC. But again, you're kind of taking that objectively clear ABC to the 1, 2 idea here, and you're removing that idea as well. So that's how we're looking at it for a top-down analysis, ladies and gentlemen. I think that's how we're looking at it. Now, altcoins. How does this fit into altcoins? Like, a lot of people are interested in understanding altcoins. Like, what is the case for altcoins? If Bitcoin is going to go into a bear market, what is going to happen to a lot of altcoins, right? It still fits into the narrative of a lot of these coins, in my opinion, ladies and gentlemen. I think that if we're still expecting a fifth wave to the upside, either as a wave 3-4 triangle, either as a possible 3-4 that we're going to get a sharper corrective move to the downside, I still think that we're going to be looking for what could be a very strong bull season for altcoins. And arguably, when you're working in the highest degree of a wave 3-4-5, then this is going to be the strongest alt season. We've seen such a strong alt season already happening on these primary and sub-minuet degrees, and now arguably also this minuet degree that's now complete. We've had very strong alt seasons happen here. This whole considered 3-4, 3-4, 3-4, we had already a strong alt season. So in my opinion, just being objectively clear as possible, is that we would expect the strongest alt season to occur during this time as well, right? So that's how we are looking at also for this fifth wave. We're expecting a strong alt season to the upside. So there's really no change in that. And it's also fitting into the overall narrative as best as we can when it comes to XRP, for example. So if we look at XRP, the breakout already occurred a little bit earlier, and that happened during that kind of accumulative phase, during that 3/4 of the primary and the sub-minute degrees that we observed in Bitcoin. So we got that strong breakout, right? We found some kind of sideways consolidation and some confidence coming back into Bitcoin. So right now we're just kind of seeing that similar type of approach here, where we may be working for that. And if we go into a bear market, if we're going to stick strictly to XRP, as you can see here, this bullish triangle, this either as a sideways structure, this move here, 56 to 70, 80% is still fitting into that flat idea, in my opinion, right? But we still do need to overcome some obstacles. We need to create some kind of B wave here. So it's really going to be boiled down to how Bitcoin behaves in the next few weeks up to the months. So yeah, I think we're going to see a major bear market for Bitcoin. We're also going to see a major pullback for altcoins, but I do really believe some coins are going to be going for a continuation, because Bitcoin, when it does, a strong, swift move to the upside, what people don't realize is the actual alt seasons actually continued until the wave 2 of a bear market was in. So that's why this idea also fits into the idea that this continuation for XRP could happen. Now, this is just an idealized 5-wave structure. It's not going to distribute in the exact way that we're seeing here. We just, as Elliotticians, we like to have geometry and symmetry applied as best as possible when it comes to predicting in real time. But right now we don't, as you know, in the past bear markets and bull markets, nothing works in perfect tandem with each other when it comes to these waves, right? Especially when it comes to timing. If you look at it, this wave 5, for example, shot up basically in a straight manner, right? Will we get that same exact type of move for a possible 5th wave to the upside? So that idea where we have this coming up, this could be the possible, 5th wave to the upside, where we're just working in a straight line to the upside, right? We're looking for that similar type of move to the upside for how this 5th wave is going to be playing out. So this would be the end of the bull run if this were to happen. But again, we don't know. We don't have enough information right now. It just looks like it's more working correctively to the upside right now. So it may be part of a larger corrective structure. So as you guys know me, as I not only preach risk management, I also exercise, and I also show my transparency on how I trade these coins, right? You know me, I've already taken 50% of my profits on XRP at $2.80 around this region over here, and I still hold 50% of my XRP just based on the fact that there's still 2 scenarios left on the table that a 5th wave could be coming and looming for the upside, either on the minor or this current intermediate degree as well. So if that's the case, I'm really well positioned, because I took the most risk when the people weren't looking for risk at that point. The most risk should be taken when you're working in a multi-series of higher lows being created and a multi-year corrective range. That's when you should be taking the most risk, as opposed to looking for risk on a confirmed breakout. Because at least when you're working within an accumulation phase, you do have clear invalidation levels, like we did for that invalidation of the triangle. I've been accumulating XRP for over 2,000 days. That is where I took most of my risk. And a lot of people now are, oh man, now they see the potential in XRP and now they want to get in. It's okay. I still think that there's opportunity, but the risk is higher now, no matter how bullish it may be. That's why I took profits here, and I also exercise that risk, and I am sitting not only very healthy, but extremely happy here. I can sleep at night, basically, right? And that's the most important thing. So build your risk here. Hustle and bustle as much as you can here, ladies and gentlemen. Work as hard as you can in your real life situation. This is financial advice. I'm telling you right now. Work as hard as you can during the periods of boring times. Build, your side hustles. Your main jobs. Try to get a promotion. And, a lot of people right now are trying to think like, should I quit my day? My real full-time job and go into crypto trader? I don't recommend that, man. I don't recommend that at all. I actually recommend to actually take this opportunity for the next bear. To be honest, I think it's too late for everyone at this point. Right now we're just trying to maximize our, profitability here instead of trying to build up as much seed capital as you can. The next bear market, hopefully, is where you will, learn that same mistake, or actually apply what you've learned in this current bull market, where you shouldn't have gone into meme coins, where you shouldn't have gone too deep in higher levels, and so forth. That's where you need to be building your positions here, ladies and gentlemen, over here, not here. Okay, so many people are getting wrecked left and right, and we just had like another biggest liquidation event. I've become so desensitized to those types of news. I think we just had like an exchange hack from North Korea. Dude, I just found out yesterday, just today when I woke up. I didn't even know it was like past 24 hours or so or something. That's what I mean. Those kinds of things shouldn't be in effect. No single event should be in effect in terms of how your portfolio should be functioning, and it should be outperforming everything in that sense, right? Both bullish and bearish, right? So that's one way of seeing it. And then the second way is, what is it? I wanted to give you guys another risk management approach. Whatever. I don't care, because no one's going to listen to it anyways. I think a lot of people are going to get wrecked anyways. So, yeah, I mean, hopefully that's, you guys are learning a lot from me, from this, not only live stream, but also how I've been building up the narrative for the past, not only year, but, 3 or 4 years. You guys know my stock portfolio as well, right? I've been 15-year cycle, basically. It took me 15 years to build up what I have built up, right? 15 years of getting in, and then 6 to 7 years of getting in, and 6 to 7 years of getting out. That's how long it takes, ladies and gentlemen. It really takes not only, hustle and bustle work during that time. I built my career during that time. I've, built up side hustles during that time. I've done a lot of things in between those times, and a lot of things in between was educating you guys and girls, right? So that's what I mean. Use that opportunity during the boring times to build up your positions as much as you can, and then use the opportunity where even just 100% breakout is going to make life-changing, events in your own life, right? Because right now, just me with this breakout of 500%, that's already life-changing for a lot of people. But for me, it's like with the 6 to 7 year of accumulating, 5+ years of accumulating XRP, even just 100% breakout, I'm happy, right? So that is where you are de-risking and de-escalating a lot of the risk when the actual breakout happens, right? Now, of course, during that accumulation phase that you're making, the only real risk that you're taking is that you're betting against a possible breakout. A lot of people were betting against the breakout, saying that the breakout wasn't going to happen. You guys know me. I was the biggest bull for XRP, but look, where are they now? It's radio silence, basically. These people are saying, oh, XRP is still going to zero, and it's just like, bring it on, I don't care. I don't listen to anyone, ladies and gentlemen. And that's another prime tip that I want to give you guys. Listen to no one. Don't even listen to me. I don't care. Listen only to yourself, because really, when it comes to trading and investing, the only enemy that is within the game is yourself. It's not the markets, ladies and gentlemen. The markets don't care. The markets don't know you exist. The only enemy is yourself. That's the most important thing. And I think that is why I've treated Twitter or X as a personal journal. And a lot of people, I think, just garnered a lot of interest along my personal journey. It's not because I've been right. It's not because I've been wrong. It's just more of the approach than anything else. It's been built up so long. My narrative has been built up so long that it eventually becomes one picture, and a lot of people start to understand the actual risk management approach is far more important than the actual, people trying to be right in the shorter time frames and trying to be right on how these breakouts are happening, right? That we should not be focusing on. The actual approach is you, basically. There's no one going to be, battling against you. The markets don't know you exist, like I said. As long as you're building your portfolio, as long as you end up in a better position than you were yesterday, more importantly, last year or so, then you're going to be in a very strong position going forward, in my opinion. So, yeah, let's get into some questions now. All right. So hopefully that was a good lesson, right? I mean, hopefully that was helpful. I mean, I really want everyone to survive this, you know, but unfortunately 1% of you is going to be surviving this. I really do see that happening. It's just going to be 1% of the people surviving this. So it doesn't matter what coins I share. It doesn't matter what, you know, stocks I share. It doesn't really matter because I know a lot of people are not going to listen anyways, to the risk management approach, that is. So let's get into some questions. Let me get some water. All right. There's no real questions, huh? Slightly off topic, but what is your plan for future investments after the US stocks and BTC go to the correction phase? Well, I've already shared my course of action that happened just in the past year or so since last March. Can you believe that? It's been 1 year basically since I've already sold off all of my tech stocks. It's been 1 year, ladies and gentlemen. But yeah, I've sold off my Tesla stocks that I've been building up. I built up in 2013 to 2016. I had about 20,000 shares for that, and I've sold off everything in 2021. I've held on to Nvidia, Nvidia, AMD. My Nvidia position was around 140 before the stock split. AMD at $12, Apple around 100 or so, Meta as well. I've been building up all of those positions basically before stocks was even considered cool back in 2016. I've sold all of those in 2024 of last year in March. So I'm sitting at a very healthy position here, and I've already started to rotate into different positions. That's shared in my Discord basically. I share that very slowly. You guys already know the hints and what kind of category I might be in. But yeah, that's currently my current position. I have 15-year basically of that stock cycle period that I've done. Now I'm shifting into a different period where I'm looking into more possible the next 15 years that has a far better opportunity than tech stocks, because definitely tech stocks is not it. I'm telling you right now, it's in a bubble. That's 100% for sure, without a doubt. Doesn't matter if there's good news, doesn't matter if there's bad news. I don't care if Nvidia can cure cancer. I really don't care, because I know a bear market is going to come no matter what. Again, that's just me though. Let's see. So someone's asking about Doge. I think Doge is in a clear bullish uptrend. I'm not in this personally because, like I said, it just goes against my own personal criteria. I should have built up Dogecoin over here. But again, I didn't like the look of this triangle here, even though this would have been a possible continuation, but it wasn't a multi-year accumulation in my opinion. So I didn't accumulate Doge at that point. And we're still at a considerable risk here, in my opinion. We should have continued this primary degree wave 3-4. So we're already narrowed down to the possible idea that now this has to be a nested 3-4-5 to the upside for a primary degree to actually even come into play. But it does still pertain to the residual criteria of how I'm looking at a possible continuation, which is why I'm sharing this idea, because it does fit into the idea that there's really no other true alternative, that is, for this being a bearish scenario here. It just fits more better as a possible series of one within a more expansion phase for a possible fifth wave to the upside. So this is where I would categorize Dogecoin when we're working for a tier system, tier 1, tier 2, tier 3. You're going to be looking for multi-year corrections here. Multi-year, higher lows being created. Is it in a macro 3-4 or 3-4, a wave 1-2 of some sort? This would be considered in a tier 2, in my opinion. And tier 2 is just more of a rotating kind of highly liquid for me. I've already given this outline in my social media, but tier 2 is basically that. It's where I have, maybe an allocation of 20 to 30% of my portfolio into these coins. Dogecoin would fit into that, but I have better aspirations in other coins. For now, Dogecoin would fit in a tier 2, which means that it can transition to a tier 3 or a tier 1, depending on how strong the actual breakout happens. Actually, it can't go into a tier 1 at all. So it's really going to just stay in a tier 2 forever or transition into a tier 3. So that's why you have to be even more selective when it comes to these tier 2 coins, meaning that tier 2, the reason why it's in it is because now the wave 4 has arguably or objectively completed, and we're already in that expansion phase right now. And even though I see the opportunity, my risk management approach for buying into these coins has to be far more selective. And right now, when we're already in a possible 1-2 idea now, and to me, even though there is a very strong opportunity for the wave 3 to continue, I just personally don't like to add this to my personal portfolio. So that makes sense, right, ladies and gentlemen? It makes sense. It's a lot of people have a hard time, categorizing these coins. And right now, this tier system for me has worked out absolutely phenomenal the past 20 years or so. So this tier 2 would fit into here. It would be something to consider, maybe, just based on how it may look. For right now, this wave 3-4 can be complete because we do have a pretty nice 1, 2, 3, 4, 5 off the lows going into a cycle 1. We have a clear ABC going into wave 2 here. We have a clear 5-way move into wave 3, and this was definitely some kind of corrective structure, but it wasn't enough for my criteria to be filled. Now we do have a possible 1-2, 1-2 in the making here, and just due to that reason alone, it just doesn't give me enough confidence to get rid of some of the coins that I'm already positioned in to get out and go into this type of coin in itself. So yeah, that's how we should be looking at it. Yarkamanik is asking, what do you think about the scenario where BTC goes to 130 and then 70K and 250, XRP goes to 5 and then 1.5 and to 10 at the same time it goes to 260 and 80? That's basically what it exactly explained, right? It's not going to happen exactly how you've written it. It's not going to happen exactly how I've written it. And that's why we have to take into consideration of cycles of cash flow, basically. If we look into my main idea here, where we talked about the cycle here, this is the #1 referred chart on not only on Google, but it's referred by basically every news outlet out there, which is the Bitcoin dominance cycle. You don't even need to look at the charts, just look at the dominance and also how Bitcoin is functioning as the control factor, and that's where alt seasons are going to be reacting, and basically based on the control factor of both the Bitcoin dominance and the Bitcoin price. So that's how we should be looking at it, and that in itself, in combination with a lot of the other techniques, that's how you should be looking at how XRP is going to be functioning against Bitcoin. And then there's also that, problem with a little bit of adding, sprinkle on some conviction, sprinkle on some risk, sprinkle on some and so forth. Let's see. Too long didn't read. The risk management, risk on during accumulation and risk off during expansion. Risk on during accumulation, yes, that's correct. And risk off during expansion, that's absolutely 100% correct. That's basically the easiest way of approaching it. But, from A to B, a lot of people get lost, right? From point A to point B, everything in between it's just really about organizational skills. Mitch Ray is saying SPY on the, I don't know who that is, man. But anyways, the higher time frames is very bearish as well as MicroStrategy. Therefore, how Bitcoin possible go up with those goes down. Follow him then, man. I don't care. I'm just following how I follow my personal strategy. But I've already given my outlook on how Bitcoin is going to be playing out. I see a prolonged correction incoming very, very soon, in my opinion. Do you have in your premium service something like courses or material teaching? No, a lot of my materials are free anyways, free material. And that's the beauty of what I share here on X-Force Global. Is a lot of my material is for free when it comes to educational, because I don't think the educational aspect should be for a paid fee. I mean, even the Elliott wave principle is free online basically at this point, the PDF version that is, right? To be honest, I don't know why, wink, wink, some people are selling something that you can actually just Google yourself. Like, it's there. The material is all there. I have all of it is here as well. So yeah, it's free material, ladies and gentlemen. It's all there. My trading view is all there. I have a guide, basically a full-blown guide there. Use that to your advantage. The only thing that you need is time to study it. That's all. Trust me, if I can get certified, all of you can get certified. I'm telling you right now. Will this bull cycle be different since regulatory clarity? Absolutely. I think regulatory clarity is already in. You guys see this. It's night and day difference between 2018 and this current cycle. The regulatory cycle is very important. In fact, that's why XRP is so important in this cycle, because it's one of the few coins, or possibly the only coin, that is actually giving some regulatory clarity within the markets, at least a framework, that is. Listening to your videos has helped me realize to take profits along the way. It's helped me come debt-free. I didn't sell at my targeted price, but still hold 70%. And that is a fantastic thing, Hillbilly, because taking profits along the way, I can tell you this, and I can guarantee you this, actually. Not a single person has regretted taking profits along the way. And even me, as the biggest bull, I should become an official ambassador for XRP at this point, right? Even I took profits at this point. That is insane, ladies and gentlemen. Even I took profits. I took 50% of my profits on XRP. That should be a testimony to what I am telling you guys right now of what I preach. That is how you should be doing it. So fantastic job, Hillbilly. I mean, you have opportunities for the next cycle to increase your positions, where increasing your positions where the risk should be taken the most. That's where you're going to learn for the next cycle, in my opinion. So there's a lot of time, man. No, you're not going to die today or tomorrow. You have a lot of time. So trust me, you will make it. Could you please wrap up which premium services you offer and what it includes? So basically, Discord offers almost a daily analysis, basically, for either altcoins or Bitcoin. It's a far more detailed analysis approach. My market sentiment, if I have like a train of thought, I'm thinking in the shower or taking a dump or something, then I'll know I'll have to update Discord, get back onto the computer and do it right away. That's kind of the best way of looking at it. So you'll get a clear instant thought of what I'm thinking, not only at that specific time, but my train of thought. Our Patreon membership offers 2 extra video updates. Basically, think of this live stream, basically a concise TLDR refined live stream for Bitcoin only, where I do 2 video updates, Wednesdays and Fridays. So there's different tiers as well. There's altcoin requests. It's a service, basically. I mean, ladies and gentlemen, I'm selling a service. I have to, right? I can't just sell everything for free, right? So it is what it is. I mean, it's just part of the business modeling structure. But I think it's very fair. I think a lot of the things I share for free, especially when it comes to these analyses, is that it's a lot of these people that aren't even sharing it for free, I'm sharing for free, basically. But if you want a more concise, in-depth train of thought, then that's where the services will probably come in handy for you. And I don't even push that too much anyways. I've been operating since 2018 anyways. What tier would I put ADA in? Tier 2. Why is my English so good? 2 things, man. If anyone wants to learn English, watch Full House, the old show, or watch Friends. Full House is where I learned a lot of English, basically. You were talking about the lecture in Korea, school, university. Could you please do a Zoom session? No, I can't do a Zoom. It's part of the policy of the university. I can't do it. But I will give everyone a date and a time very, very soon. Can I show its shorter time frame for XRP? Okay, sure. It's most likely going to be observed as this. I mean, it's just with the current data given. I mean, I can't really... It's difficult here, man. It's really difficult. But either we're working in... This is pretty corrective in itself. It's pretty arguable that this is a three-wave off of the lows here. This move here is an ABC here. ABC as a possible running variation here. Triangle here for wave B. So this would be the A, this would be the B, and this would be the C, where we have this as the B wave here. So that is how I'm seeing this. ABC here, and then this move off the lows could be an impulse or corrective move. It really doesn't matter. But right now, since it's moving quite correctively, I'm just more objectively biased that this is possibly working in some kind of diagonal of some sort. Even I don't know, man. It's really hard to say what it is. But for now, it just looks like some kind of ABC has been created here when we created one more higher high here for wave 3. This could be a 4. Wave 4 could still, arguably be in the works here, where we create one more ABC to the downside, maybe as a short C wave, and then the 5th wave comes in. And then we get that C wave to the upside, where we create one more high to the upside against this previous high that we created this year. That should bring us up into the $3.80 and $4 region. And that's where I will take 25% of my remaining targets. Remember, I have 50% already taken here. And then another 25% should be taken around these regions here. And then here, I will see if this is going to be transitioning into a bear market, or if this is possibly part of a larger 1-2 corrective scenario. And if that opportunity arises, I'll probably DCA until I start seeing signs of a possible running scenario where a 5 wave has completed. If not, this regional low here is where I'm going to possibly deploy a little bit more capital into XRP, build up my positions once again maybe, and then anticipate for a larger move to the upside. And I'd be happy to be wrong at that point, because already I've taken a lot of my positions off anyways, and I have a little bit more wiggle room for how these positions are going to be playing out. So, can you share how to increase your win rate, and how about Ethereum now still bullish? Ethereum is still bullish, ladies and gentlemen. Ethereum is still bullish. I still think that we're working in a larger triangle or a series of 1-2s. Yeah, so it's extremely bullish in my opinion. There's just no other way. There's no other way of looking at it from an objective standpoint. I think that's it, ladies and gentlemen. But yeah, let's look at Bitcoin one more time. I'll summarize it one last time, and then we'll end the live stream here. So for those that are just, looking for another Bitcoin analysis, I've given all my reasons, but it's basically boiled down to a series of 1-2s, and I've given my reason on why this is still objectively the higher alternative scenario as opposed to a sideways 3-4 triangle. Again, there's hypocrisy based on the shorter time frame 1-2s being too large in time. I think a lot of Elliotticians, especially people who have DM'd me, I think a lot of people are building or over exaggerating how this is done. But if that's really the case, then this wave 3-4 of a triangle should really be out of your position here. And that led me to the conclusion that if that's the case, this idea would fit better in terms of having a possible move to the downside, where we create one more wave 4 to the downside, ABC. This would be some kind of range as a possible triangle here, most likely. Then yeah, wave 4 is now pending. We're looking for another ABC to the downside, wave 5 to the upside. Boom. I'll share a more detailed count on how this wave 4 could be achieved, and now actually this might become another main alternative scenario to me, as opposed to a larger sideways triangle wave 4. So it's really do or die at this point, because even with these levels breaking here, that triangle idea is already out of the picture. So hopefully that's helpful, ladies and gentlemen. The bear market scenario I've also shared. I think that scenario is not really applicable at this current time of stage in the markets. Again, if you guys would like to get more in-depth of the markets, please join me at my Discord or Patreon, whatever you want. And also, a lot of my material is for free anyways. So, yep, thank you very much. I'll see you guys in a different live stream or possibly in a different video update. Thank you very much. It's Saturday here, so I'm going to use this time to kind of rest a little bit. I'll have more updates in my social media as well. Thank you very much. Please make sure to hit that like button. Subscribe to the channel, ladies and gentlemen. Thank you so much for your support. It means so much to me. We've hit over 10,000 subscribers. We're now reaching 12,000 subscribers, something that I never imagined. Thank you so much. I will see you guys in the next video. Have a fantastic rest of the week. Bye-bye.